Hey, I'm James Leichter, president of Aptora. In today's video, I want to give you the absolute easiest method possible to price jobs in your company. It's easy, yet it's accurate and it's reliable. Best of all, it only requires 3 pieces of information. You need to know how many techs you have, how many days they're available to work, and your company's overhead. That's it. Let's get started. As I mentioned, one thing you're going to need is to know your company's overhead. You can find this on an income statement. If you use QuickBooks, NetSuite, Total Office Manager, print out an income statement for your entire year. Before we get into the calculation, I would like to cover a few things about your income statement. All income statements should look very similar. There will be some minor differences based on how your company set up your so-called chart of accounts, but the structure should be the same regardless of what software you are using. At the top of the income statement is a list of all sources of income totaled out. You can think of this as revenue or sales. Directly below the income is the cost of goods sold, sometimes referred to as direct expenses. They will be listed depending on how your chart of accounts was set up. When they're totaled out, you will see the total costs of goods sold, and below that will be your gross profit. Gross profit is your income minus your total cost of goods sold. That is a very important number. Gross profit is a very important number. That is what you use to pay your overhead. So I'm going to circle gross profit as a key number. As we continue down the income statement, we should next come to expenses, and these are sometimes referred to as overhead by most of us, but your income statement will probably call it expenses. Again, depending on how your chart of accounts is set up, will dictate what line items you see. But when they're totaled out, you'll want to circle that number. Now, I'm going to circle the number right here. So we have income minus cost of goods sold. That leaves us with gross profit dollars. We use our gross profit dollars to pay our overhead. I've circled my gross profit, and I'm going to draw an arrow right down there to total expenses, because those expenses are paid with those gross profit dollars. If you have any money left over, we call that net profit before taxes. And this company, a real company, has a net profit of 1.2%. That may not sound very great, but that is fairly normal for our industry. The average is around 2.45%. So this is somewhat typical. Now that we've identified our expenses or overhead, we are ready to make the calculation to price a job. And it is so easy, you'll be surprised. I have a couple of worksheets that you'll be able to download just to save us some time, but you could use a scrap piece of paper. You can use a cheap calculator or your phone calculator on your phone. That's all you really need is scrap paper and something to write with. On this piece of paper, I have transferred the annual overhead, which we circled a moment ago, $2,099,495. That's the annual overhead for this company. Now, as I mentioned, this is a real company, but we have changed the name of the company to protect their identity. But everything about that income statement is real. I've transferred the $2,099,495 to this sheet of paper. Then next thing that I need to know is how many billable employees do we have? How many installers, technicians, maintenance people, if you have them? How many? In this case, they have 10, so we write down the number 10. Now we know how much overhead these 10 technicians are responsible for annually. We take the $2,099,495 divided by 10, and That leaves us with $209,950. That's how much the technicians have to cover every year, over $200,000 each. Now we want to consider how many days in a year do we have to generate sales, revenue, income. For most companies, it's 229, and you can see how we arrived at that. 52 weeks in a year, 3 weeks of vacation, a week of paid time off or sick time. That gives us 48 weeks. We have 5 days per week. That gives us 240 days. We have 11 federal holidays. That gets me to 229. Your number might be different, but it shouldn't be too different than that. So I'm going to transfer the 229 here. I'm going to then take 209,000 and divide that by 229, and that gives us 916.81. So what does that tell us? Our technicians have to generate $916.81 every day for us to pay the overhead. But that is $916.81 gross profit dollars per day to pay the overhead. That's quite a burden. We're really asking a lot from them. That's why this company has a 1.2% net profit, because it isn't easy to generate $916.81 in gross profit dollars day in and day out. You're going to have some days where you fall quite short, and you're going to have to make that up on other days. But day in and day out, they have to average $916.81 in gross profit dollars just so you can make zero money. You'll make nothing. You lose nothing. You gain nothing. 916.81. That's an important number. I'm going to circle that number because we're going to use that on the next worksheet. When we price a job, we can use a worksheet that's this simple, or we can use something more complicated. Here we have an estimate and job costing worksheet that is more detailed. It allows us to itemize everything on the job, but the result would be the same as what you're going to see on this worksheet in front of me. The first thing we want to do is write down the base pay for the technician. In this case, we will consider $30. We then want to add for fringe benefits and other expenses, taxes, workers' comp. If you don't know that exact number, a very safe multiple is 1.3. Take 30 times 1.3, and that gives us $39. So it costs us $39 for this technician. Fully burdened is the term that many of you have probably heard. Let's transfer that down here. We have labor cost, person hours, 32. That means we're considering that the job is going to require 32 labor hours, person hours, times 39, our fully burdened wage. That equals $1,248. So on this job, our cost for labor is $1,248. Now we want to total up all of the equipment that we are going to use on the job, and I'm going to write down $10,000 to make the math easy. We then total up all of the materials for the job, and I'm going to write down $2,000 to make the math easy. If we had subcontractors, we would want to write that down. And then finally, other direct expenses, everything else that you haven't considered. And I'm going to throw on $1,000 for other direct expenses. That gives us a total cost of goods sold of $14,248. Now, you might say, well, that's my break even, but that isn't. That is not your break even. You haven't paid any overhead. You've paid your technician. You paid their fringe benefits, which is a direct cost. You've paid for the equipment, the materials, subcontractors, other direct expenses. If you added all of that up correctly and your predictions were all 100% accurate, then what you've done is you have come up with a price that will pay all of your direct costs, but we still have to cover overhead. We have rent, admin, vehicles, and other expenses. As we saw earlier, we know that number. We want to write down how many days of overhead we have to cover. If this is a 2-day job, then we write 2 times overhead, which was $916.81, times 2 technicians. So that's 2 days on the job, 2 technicians, $916.81 per technician, as we saw earlier, and that works out to be $3,667.24. Let me recap that. For a 2-day job, 2 people, they have to cover $3,667.24 in overhead. That's your true break even. If you total $14,248 with $3,667, now you have your true break even. If everything goes just as you predicted, you will make no money and you will lose no money. And if you continue to do that for an entire year, you will have 0 net profit. But you wouldn't have lost anything either. You would have covered all of your bills. Now you need to add for net profit. It's very important to think in terms of what is it going to take to get to break even? Then you add for net profit as a second step. How much net profit? It's up to you. It could be anywhere from 0 to 40, 45% or more. Base your net profit on how badly you want to make the sale or how desirable the work would be to you. If you are swamped, then you might price the job very high by adding a large amount of net profit. If you are very slow and you're worried about keeping your people busy, then you might price the job anywhere from 0 to maybe 5% net profit and barely make any money. It all depends on where you're at in your company, the desirability of the job, how much work you have waiting on you, etc. Isn't that how airlines do it? When you buy the first ticket on that airline, you might pay the least amount for your ticket than anybody. If you buy the last couple of tickets, then you might pay the most. It all depends on the airline's feeling how easy it will be to load up that plane. That's how the stock market works. It's supply and demand. If you don't have a lot of supply, then you want to control demand by increasing or decreasing your net profit. And that's why we always add it as a second step. So this job would sell for $20,915. That is the retail price. Now, I've included the formula to use if you want to think in terms of a net profit percentage, such as 10%, 12%, 20%. The formula is at the bottom of the worksheet, and you'll be able to download this worksheet. And that's it. That is pricing made simple. All right, that wraps it up. That is all you need to know to price jobs accurately, consistently in your contracting business. As always, if you have any comments or questions, we would love to hear from you. Post them below, and we will do our best to answer them. If you like the video, please give it a like, a thumbs up, and subscribe to the channel. If you would like to download the forms that you saw in the video, there is also a link for that below as well. We will also give you our job costing estimate worksheet along with those materials. Once again, I'm James Leichter, president of Aptora. Thank you so much for watching.